Artificial intelligence, or AI, is the buzzword on everyone's lips these days. It's hard to scroll through any social media feed or news outlet without stumbling upon articles about how AI is set to revolutionize industries, automate jobs, and reshape the workforce as we know it. But let's take a moment to unpack this phenomenon, especially as it pertains to accounting jobs. Are accountants really on the brink of being replaced by algorithms and machines, or is there more to the story? Recent studies suggest that a staggering 80% of jobs in the U.S. will be impacted by AI in one way or another. And among those most likely to be affected are engineers, writers, analysts, and yes, accountants. The University of Pennsylvania found that workers earning up to $80,000 a year in tech and finance are particularly vulnerable to this wave of automation. With 90% of businesses now focusing their attention on AI, it's no wonder that many are raising eyebrows and asking the question, will AI replace my job? Now, before we dive into the nitty-gritty, let's clarify what we mean by impact. The impact of AI on accounting jobs could be significant, but that doesn't automatically equate to job loss. Instead, we're more likely to see a transformation within the profession. Think about it. AI is exceptionally good at automating repetitive tasks. It can handle data entry, invoice processing, bank reconciliations, and even tax calculations with speed and accuracy that far exceeds human capabilities. This means that accountants can shift their focus away from these mundane tasks and concentrate on higher-value activities that require strategic thinking and human judgment. Imagine a world where accountants are no longer bogged down by the minutiae of data entry. Instead, they can analyze large volumes of data, uncover insights, identify trends, and make informed recommendations to clients or management. AI can enhance data analysis, providing accountants with the tools they need to deliver real-time financial reporting and personalized financial advice tailored to each client's unique situation. Sounds great, right? But let's not get ahead of ourselves. While AI can take over many routine tasks, there are aspects of accounting that simply can't be automated. Complex decision-making is one of them. Accounting often involves making choices based on incomplete or uncertain information, like determining the value of an asset or estimating its useful life. These tasks require deep domain knowledge and critical thinking that AI struggles to replicate. Then there's regulatory interpretation and compliance. The accounting landscape is littered with complex and ever-changing regulations. Sure, AI can help track these changes, but when it comes to interpreting and applying them, human expertise is irreplaceable. Accountants are also bound by ethical considerations. They must maintain confidentiality and act in the best interests of their clients, a responsibility that cannot be delegated to a machine. Communication is another area where AI falls short. Accountants need to convey complex financial information in a clear and understandable way. They must build trust and maintain relationships, skills that require empathy and interpersonal abilities that AI simply doesn't possess. And let's not forget strategic advisory roles. Accountants are crucial in identifying growth opportunities and managing risks, tasks that require a nuanced understanding of a client's business context and industry trends. So, if AI is set to automate many tasks, why should accountants not worry about losing their jobs? Here's the thing. The reality of corporate life is often far removed from the headlines. Many organizations have developed a sort of defense mechanism against automation. Take Microsoft Excel, for instance. Accountants have become so adept at using it that it's practically a shield against the encroachment of AI. You'd be surprised how many companies still rely on outdated processes and systems that don't even communicate with each other. Instead of embracing automation, they've opted to add more headcount to ensure that tasks are performed manually. And let's be real, many decision-makers in corporations struggle with basic tech tasks. If they can't even connect their devices to the office Wi-Fi, how can we expect them to implement sophisticated AI solutions? The resistance to change is palpable. Employees and management alike may resist new technologies out of fear for their job security or a belief that human judgment is irreplaceable. Regulatory and political constraints also play a significant role. The accounting profession is highly regulated, and lawmakers may hesitate to approve widespread automation due to ethical concerns and the potential impact on employment. Poor job and system design can further hinder automation. Many accounting tasks are interrelated and require contextual understanding, making them challenging to automate effectively. Let's not forget the financial aspect. Implementing AI requires significant upfront investments in hardware, software, and training. Smaller firms with limited resources may be reluctant to take that plunge unless they can guarantee a return on investment. And what about the fear of unintended consequences? If technology were to replace experienced accountants, organizations might worry about the risks of errors, bias in algorithms, or the loss of institutional knowledge. Cultural and social factors also come into play. Many clients and organizations still prefer the perceived trustworthiness and personal touch of human accountants over automated systems. So, while AI will undoubtedly transform the profession, it's unlikely to fully replace accountants anytime soon. In fact, a common sentiment echoed by many professionals is that AI won't replace you. Rather, it's a person using AI that will have the upper hand. Those who master AI tools will find themselves at an advantage, even if some of their traditional roles become obsolete. I remember when I first started using AI tools. My initial reaction was fear of job loss, fear of being replaced. It's a natural response to any new technology, especially one that seems so adept at performing tasks we've spent years honing our skills to master. But as I delved deeper into the capabilities of these tools, I realized that they could enhance my work rather than diminish it. In summary, should accountants worry about losing their jobs to AI? The answer is nuanced. While AI and automation have the potential to significantly transform the accounting profession, various factors, including resistance to change, regulatory constraints, and the inherent complexities of accounting tasks, will likely slow down the pace of automation. Instead of viewing AI as a threat, accountants should see it as an opportunity to evolve. Those who adapt and develop new skills in data analytics, strategic advisory, and technology will be well positioned to thrive in this evolving landscape. Organizations that wish to adopt AI must confront entrenched issues in politics head-on, dedicating time and energy to drive meaningful change. Ultimately, AI will create a divide between organizations that embrace transformation and those that ignore it. The future of accounting isn't about replacing jobs, it's about enhancing the role of accountants and allowing them to focus on what they do best, providing valuable insights and strategic advice to their clients. So, rather than worrying about job security, accountants should be preparing for an exciting new chapter in their profession, one where they can leverage the power of AI to elevate their work and deliver even greater value to their clients.